Imagine working 100 hours a week. Imagine living on caffeine, running on anxiety, and barely sleeping, all for the chance to make millions. That's the life of an investment banker. It's a world where sleep is optional, Excel is your best friend, and one deal can change your life. But here's the real question. How do these bankers actually make money? Are they just shuffling numbers on a screen and hoping for the best? Well, kind of, but not really. This is the truth behind one of the most grueling, most misunderstood jobs in finance. It's a story about money, madness, and the relentless pursuit of wealth. But it's also a story about sacrifice, pressure, and asking yourself the ultimate question, is it really worth it? So buckle in, because for the next few minutes, we're going to dive into the insane world of investment banking, uncover how these people actually earn, and why so many of them burn out before they even hit 30. Let's clear up a major misconception right away. Investment bankers are not stock traders. They're not sitting in front of 20 flashing monitors yelling buy or sell. That's Hollywood. The truth is more interesting. Investment bankers are the deal makers, the matchmakers of capitalism. They are the middlemen who bring businesses and money together, and they take a very, very big cut in the process. Picture this. A huge company wants to buy another for billions of dollars. Who makes it happen? Bankers. A startup wants to go public and sell shares for the first time? Bankers. A CEO wants advice before making a risky move into a new market? Bankers. They're not just number crunchers. They're strategists, negotiators, and sometimes therapists for stressed out executives. And every time they close a deal, they cash in. But here's the thing. For every glamorous million-dollar payday you read about in the news, there are armies of young bankers, analysts, and associates grinding away in the background. These are the people living in the office, surviving on delivery food, staring at Excel until their eyes blur. They're paid well, sure, but the workload is brutal. And the higher you climb, the bigger the rewards, but also the steeper the price. So let's break it down. What exactly do investment bankers do? There are four main pillars of their work. First, mergers and acquisitions, or M&A. Think of this as corporate matchmaking. One company wants to buy another. The bankers step in, run the numbers, negotiate the price, and then collect a massive fee for making it happen. Second, IPOs, or initial public offerings. That's when a company sells its stock to the public for the very first time. The bankers decide what those shares should be worth, connect the company with investors, and take a juicy slice of the money raised. Third, debt and equity financing. Some companies don't want to go public, but still need cash. Bankers help them borrow money or sell shares privately. Again, the bank takes its fee, and the company gets the funding it needs. And finally, financial advisory. Basically, bankers are very expensive consultants. A CEO wants to know if buying out a competitor is a good idea. The bankers build massive spreadsheets, run models, make fancy presentations, and charge a fortune for their advice. Now, here's where it gets fascinating. How much are these people actually making? Let's start at the bottom. A junior analyst, fresh out of college, can pull in a salary of $100,000 to $150,000 a year. That sounds amazing until you realize they're working 80 to 100 hours a week. Do the math, and their hourly wage doesn't look so crazy anymore. Next up, associates, who've survived a few years in the industry. They make somewhere between $150,000 and $250,000. Then come vice presidents earning $250,000 to $400,000. And finally, the managing directors, the kings of the food chain, making anywhere from $400,000 to over $1 million a year. But here's the kicker. That's just the base salary. The real money comes in bonuses, and those bonuses can be insane, anywhere from 50% to 200% of your salary. That means an analyst making $120,000 could walk home with another $100,000 on top. And at the highest levels, we're talking 7-figure bonuses for a single year's work. But before you go out and buy a Navy suit, let's talk about where that money actually comes from. It's not magic. Banks make their money by charging massive fees. If one company buys another for $10 billion, the bankers might take 1 to 2% as their fee. That's $100 to $200 million. Just for putting the deal together. For IPOs, the cut is usually 5 to 7%. So if a company raises $1 billion, the bank pockets $50 to $70 million. And in debt financing, even a tiny percentage adds up when billions are involved. These fees trickle down into salaries, bonuses, and the kind of wealth that makes headlines. But remember, this comes at a cost. Investment banking is one of the most brutal career paths out there. Junior bankers often sleep under their desks. They work weekends, cancel plans, and live on takeout. Burnout is not a possibility, it's almost guaranteed. Most analysts quit within 2 to 3 years, trading their fat paychecks for a little bit of sanity. And here's the darker side. The stress isn't just professional, it's personal. Sleep deprivation, unhealthy diets, constant pressure, they take a toll. Physical health suffers, mental health suffers, and relationships crumble. Imagine being on call 24/7, knowing a single mistake in a spreadsheet could cost your firm millions. Imagine a boss calling you at 2 a.m. to fix one slide in a 200-page presentation. That's not an exaggeration, it's the norm. Even worse, job security doesn't really exist. If the market crashes, banks cut costs fast. Whole teams can be wiped out overnight. And just like that, the long hours, the sacrifices, the endless work, it can all vanish. So why do people do it? Why do thousands of bright young graduates line up every year for the chance to work in investment banking? Simple. Because for those who survive, the rewards can be life-changing. Investment banking opens doors to some of the most lucrative careers in the world. Some leave after a few years for private equity, where the hours are a little better and the pay is even higher. Some go to hedge funds, making bets on markets with the potential to earn billions. Others move into corporate finance, becoming CFOs of Fortune 500 companies, trading 2 a.m. emails for a more balanced life. And a select few become entrepreneurs or venture capitalists, investing in startups and building empires of their own. In other words, investment banking is a launchpad. Brutal, exhausting, soul-crushing at times, but also a stepping stone to wealth and influence most people can only dream of. So now comes the big question. Is it worth it? Would you sacrifice your 20s, your health, maybe even your peace of mind for a shot at massive wealth? Some people say yes. They see the money as worth the grind. Others walk away, burned out, never wanting to open another Excel sheet again. The truth is, there's no right answer. It depends on who you are, what you value, and how much you're willing to sacrifice. Investment banking isn't just a job. It's a test of endurance, of ambition, of how far you're willing to push yourself. So what would you do? Take the high-paying job with 100-hour weeks? Or make less money, but live a life you actually enjoy? Drop your answer in the comments. Because next time, we're diving into the world of hedge funds where the hours are shorter, the bets are bigger, and the money is on a whole different level.